Hello, everyone, and welcome to another episode of Trader Talks. Today, we have a fantastic guest. We have Alok Jain of Weekend Investing. He's been in the markets for 25 years now? And I always ask him, how old are you, Alok? And he doesn't tell me. But his belief in momentum investing and actually system trading is what we will learn today. People think system trading is only short term. Actually, it can be really long term, and an active review of the portfolio can be done when you're sort of adapting to how the market is moving. And it's not gut based, it's factor based or rule based. So I'm sure you'll really enjoy this. Hi, Alok. Thanks for coming, man.
Hi Pratik, thanks for having me on your show. And my stint in the markets is now almost, I think, 28 years. So you can do the math and get there.
Dude, a lot of people are not even that age watching this. If you aren't, write in the comments how old you are. I'd love to know what is the age group watching this.
And let me qualify that a lot of people that I interact with Twitter who are less than my experience in the market know a lot more than me in terms of market knowledge. So, I mean, the kind of knowledge base that people have today, the youngsters, I'm totally amazed by that.
So nice. Wow, very nice. So, Alok, I have the first question over here. There are many different kinds of ways to invest and ways to trade. You're somewhere in the middle, right? You're not trading, you're not buy and forget also. You're somewhere in the middle, which sounds interesting balance. So why momentum investing? What's the story behind that?
So the idea of momentum investing came to me after several iterations over tens of years of my trying to be a long-term investor. And I used to be a trader also at the same time. And I found that, after every business or market cycle, I would make a lot of money, I would lose most of it, then I would make a lot of money, lose most of it. So I was saying, something going wrong. And whereas in the trading part of my book, I was doing very well because it was going as per a strategic plan, as per a framework. You were able to get out. Investing part was not happening like that. So I said, why should I not mix these two? Bring the nice framework and discipline of trading as a structured trading portfolio and merge the portfolio aspects of investing. Having 20, 30 stocks in a portfolio, giving them allocation. And bring them together and create a sort of product where you get the benefits of long-term investing, yet you have the discipline of the trading along with it. So I created these few portfolios of various sub-segments of the market. So, looking at Nifty stocks or looking at CNX 500 stocks or mid-cap, so on and so forth. And I created baskets of securities, baskets of stocks. And I created rules around how I will be entering. So basically 4 rules, what to buy, when to buy, how much to buy and when to sell. These are 4 cardinal rules that were created that at any point of time, these 4 questions should be answered in your book, at any point of time. So there is no ambiguity or question of any kind, that, today this has happened in the market, what should I do? That should not be the case. I mean, these are basically rules which should be crystal clear because they are based on analytical methods and not on qualitative or management bahut achhi hai, that kind of a thing. So I mean, see what happens is there are 50,000 variables in the market. Ek global macro variables are moving, interest rate cycles, so on and so forth. Then within the industry, a lot of things are changing. Government is doing a lot of jiggery pokery here and there. Then within the industry, there is market share competition happening. Sometimes somebody has larger market share, sometimes that is changing. FI inflow going in and out of that, liquidity is going in, out, and that is also creating a lot of change. So where do you put a handle on, how you're going to really value that particular instrument? It's very difficult. I mean, it's like art. And you have to be a Picasso to really be an investor based on value or fundamentals. Which at least I was not. So, and it was very clear in my head that this is not my game.
So I find this very interesting. You've quantified everything from selection to entry to exit. And you said one more thing, but basically the entire portfolio.
Yeah. So essentially everything is quantified. I mean, there is no ambiguity. Yes, there can be ups and downs within this also. I mean, no no strategy can go without a drawdown at any point. But over a longer period, if you see, and as an analogy, that let's say 50 people are running a ultra marathon, okay, and 10 people take a lead, 20 are somewhere in the middle, 20 are somewhere in the back. Now you want to bet on this group as a cohort. Which cohort will you bet on? You'll probably bet on the guys leading the front, and you will continue to be with them until let's say two of them slip back into the second category.
I think this is very interesting. I'll pause you here. You said cohort, right? So there's the cohort in the front, cohort in the back. You didn't say you will bet on a single horse / marathon runner. And I think that is the essential part of this entire system, right? That you're betting on the cohort, a group of companies which are on top right now. And some of them will become laggards in the future, but all of them turning into laggards is slightly unlikely. Even if that happens, you will still have a rule to exit, but the likeliness of this cohort winning more than the laggards completely makes sense. This is a numbers game, that means.
It is absolutely a numbers game, and what you're doing is you're not only choosing that cohort, you're doing a rebalance of that cohort every month, every week. So you're saying, okay, this guy has slipped back into the second or third category. Let me get out of it. Let me get the new winner into my cohort. Whoever has replaced him.
But this is so ruthless. You're not looking at how well the founder talked in his AGM and how many applause he got. Isn't that incorrect, Alok? What do you think about that?
So I think all that is just noise. I mean, all that is noise that we keep hearing from all media, from our research, from everywhere. We are basically confusing ourselves by reading more and more and going deeper and deeper into any particular stock. Because at the end of the day, what you have to see is, are you saying that you are smarter than the market? By doing all your research and by finding that this company is going to go this way on my Excel sheet, are you saying that the market is dumb and I am smarter than the market, or are you willing to sort of exceed that the market knows better than me and let me follow the market, let me not try to be smarter than the market? So these are two different sort of camps, where you say that, okay, I will do all these studies and I'll do all the sum of the parts and I'll do earnings discounted flow and I'll come up with a number. But the market is stupid, it doesn't know that. I know it. And these are my assumptions X, Y, Z, and hence this will happen. But the market is not stupid. I mean, the market is made up of millions of people like you. So our idea in Momentum is that we are not trying to superimpose our so-called intelligence on the market. We are saying the market is supreme, Bhav Bhagwan che, BBC principle, Bhav Bhagwan che, and we are following the market. The market says this stock is going up, this cohort is going up, we are willing to follow that. Market says this is coming down, we'll get out.
So I'll summarize so far. Aapne bola, we will not analyze the market and think we are a super intelligent being who can figure out all these macro events and project it into the future and say, yaar, ye company na aage jayega. We are saying, the market has agreed that this cohort is doing better than this cohort. Therefore, I will bet on this cohort and I will continuously rebalance based on how people move in and out of this high performing cohort, which means you're following a system. It is logical. It is not arbitrary based on your gut. If it was, maybe you had a bad breakfast and you could have taken a wrong decision. In case mein, that won't happen because you're following a set of rules. Now, my next question, and I'm sure the listener is listening to this, is probably thinking about this. हमने system की बात कर ली, philosophy की बात कर ली, but we use the word momentum. What does momentum mean? Is it price momentum? Is it earnings momentum? What does momentum actually mean? Like वो आगे वाला cohort क्या कर रहा है? क्या बोल रहा है यार ये आगे है?
So momentum, if you go back to your physics book of 8th standard, momentum essentially is a phenomena that an object in motion remains in motion until an external force will stop that. So the idea is that what is going up, let's say in the market, is having that momentum. So momentum is measured basically today's price versus, let's say, last year's price, today's price versus 6 months back price. So you are basically seeing the rate of change in simple words. And that rate of change can be on price, it could be on anything else also. I mean, I fundamentally believe that all investors in the market chase some momentum of some sort. So somebody is chasing earnings momentum, Somebody's chasing, increase in valuation of some sort. Somebody's chasing market share changes. So some rate of change is something that everybody's chasing. We are chasing the rate of change in price versus other aspects.
तो इसमें तो फिर एज हमारा एग्जिट हो जाता है ना. देन मोमेंटम इज ओनली वन पार्ट ऑफ द गेम. द एग्जिट इज आल्सो रियली इंपॉर्टेंट पार्ट ऑफ मोमेंटम इन्वेस्टिंग एज अ होल, राइट?
Yes, exit is actually the most important part of investing for any investor, not just momentum investor.
ये लोगों को झूठ क्यों बोला गया? आई विल होल्ड दिस अंटिल आई डाई. ये गलत है नहीं?
वो बफेट साहब कर लिया तो सब सोचते हैं हम बफेट हो गए.
सही कह रहे हो. I completely agree.
One has to see that, okay, चार्ली मंगर, बफेट, all those gurus, वो 8-10 लोग हैं वो, या 100 भी होंगे. आप उनमें से नहीं हैं, तो मतलब let's get real, right? I mean, Virat Kohli or Sunil Gavaskar also got out on zero many times. Tendulkar also got out on zero many times, but that doesn't mean anything. I mean, you could still be God, but still have failures. So from that perspective, अगर एक किसी ने कोई थ्योरी पकड़ी हुई है, तो या तो आप उसको उस लॉन्जेविटी में टेस्ट करें जितनी लॉन्जेविटी में उन्होंने टेस्ट करी है. So from that perspective, I think वो है, लेकिन exit बहुत ज़रूरी है. And I learned it very early in my investing days that without exit, essentially you are trapping yourself in a narrative. And once, let's say you bought a stock and it went up a little bit and then it started to fall, you've now studied so much about the stock that you are married to the stock. तो अभी अब वो गिरना शुरू हो गया, वो 50% डाउन है, अब आप और स्टडी कर रहे हो, अब और उसके रीजन आप और लोगों से पूछ रहे हो कि ठीक है ना ये. And then you are doing reinforcement. वो कोई bias भी है इसका, कौन सा confirmatory bias इसे बोलते हैं. So you are reinforcing and confirming that yes, this is the right one. Whereas the price is telling you नहीं भैया इसको छोड़ दो, कोई और देख लो.
If someone has savings, उसने 100 रुपए equity में डाला है. 100 rupees is put into equity. Now, how much should he allocate to momentum?
मतलब अगर मेरे से पूछो तो मैं तो 100 बोलूँगा, लेकिन मतलब आप फॉर सेक ऑफ साउंडिंग मोर सेन, मैं कहता हूँ 10 रुपए आप एलोकेट कर दो, एंड यू वॉच इट, यू सी ओवर ए पीरियड ऑफ टाइम व्हाट इट डज वर्सेस योर अदर 90.
Sure.
You will bring your 90 into this also over time.
So you think it's okay that the entire equity exposure is momentum style, and that's completely fine?
This is only purely in equity, I'm saying. Overall, of course, asset allocation should be there. And one more thing I want to add is, of course, while momentum investing, is sort of in collusion with value or fundamental investing, I think both can play a significant role in one's portfolio. And it's like, there's a relay race. So when value emerges, it runs for a while and then it hands the baton to the momentum guy, and then he runs, and when momentum fades out, he hands it back to the value runner. So value cannot do anything by itself unless momentum comes in it. That's what I'm saying. So momentum is essential, but to sort of feel good that yes, I'm holding a stock which has 200% of cash, more than what the price is, although it is not going up.
It's fine. So, it feels better. Okay? I understand that. So one thing interesting about momentum investing is that it's factor based. So it can be quantified. You can put in numbers and get out an output. So there are a lot of momentum ETFs now in the market, जहाँ पे it's completely automated, but उनमें liquidity नहीं है. तो I think more momentum ETFs will come out, but I think participation of investors is pretty low. What do you think? What's going to happen? Do you think momentum ETFs and factor-based ETFs might become the norm in the future, and many people are choosing it? What do you think about that?
So I think momentum will remain one of the factors which people will follow. In India, this is very sort of nascent stage right now. I think 1 or 2 ETFs have come out, and their rebalance cycle is like 6 months, I think. So a lot of people don't have that confidence that we should put money into this and the rebalance will happen after 3 months or 6 months. So it's going to take time to evolve over a period of time. If they are able to show good results, I'm sure a lot of vision goes there. But because this is sort of in the middle of active and passive, people really don't want to be too passive about it also. So from that perspective, I think like most of our users are the kind who want to be involved, to some extent. So these are people who have come from mutual funds investing and saying that okay, we want full control over our investing and we want to be a part of what's happening. So whether it's a rebalance happening every week, whether it's a rebalance every week or every month, or just knowing what is happening in my portfolio. When you send your money to a mutual fund, you are actually cut off. You don't know what's happening. It's black box, and you feel that it's a black box not in my control. Here at least at the moment, in any moment, if you feel like you can exit. I mean, the stocks, they are in your own demat account. You just press one button and you can be out of it. So from that perspective, I think this platform of small case and having a mix of active and passive, I think that plays well.
ठीक है, अब थोड़ा पर्सनल क्वेश्चन. अगर आपके पास 1 लाख रुपीज इन्वेस्टेबल कैश है, पहले तो टेल मी हाउ डू यू गेट टू इन्वेस्टेबल? डू यू डू समथिंग एल्स? कुछ इंश्योरेंस वगैरह भी करते हो? एंड देन इन्वेस्टेबल में एसेट एलोकेशन कैसे होगा 1 लाख रुपीज के एग्जांपल से, योर पर्सनल?
So my belief in asset allocation is much more stronger than most people in the market. I think we give a lot of importance to equity, and it should be there, but we give not enough importance to asset allocation. So I think most asset classes in their own due course of time do well, whether it is real estate, whether it is gold, whether it is bonds, they do well. Equity, for its nature of the volatility that it brings in, it has that the risk premium that you get in the returns. That is fair. But to put all your eggs in one basket, or to put most of your eggs in that basket, is something that I'm not comfortable. So my suggestion to most people usually is that in your sort of younger age, as you are going towards middle age, maybe more exposure to equity is good. But then later on, as your things are maturing, as your corpus is becoming larger, you would want to take lesser risk. Ideally, of course, it all depends upon each person's outlook.
And how do you buy gold? How do I? Because I know I can't go to like a Tanishq to buy it, because that's not gold, that's jewelry. How do I buy actual gold online?
No, you can go to, let's say, an MMTC or official distributor of a gold bar. I mean, you can buy bars. You need not buy jewelry because you'll have to pay for the making. Or you can buy sovereign gold bonds if you wish to buy the electronic format.
How do you do it? Sovereign gold bond, how do you do it?
So I have a mixture of all of these. So
okay. What about gold bees? Tell me about
gold bees is very good if you want to combine them with your portfolio in the market, because it's very liquid. And sovereign gold bond is very good if you have a long term view, you want to hold on to it for 5-7 years. They pay interest on it for 2.5%. So actually the CAGR on sovereign gold bond is 2.5% more than gold returns, which is crazy actually.
So do these both of gold bees and sovereign gold bonds, do they reflect actual gold?
Yes, absolutely.
Correct. So guys, I asked a bunch of questions for you. If you have more questions around gold, please answer it. I will make Alok respond to them so that all your questions are answered. So please aap niche puchiye, because I know a lot of people have questions around this. But you did not answer the question. What is your allocation of gold and equity?
मेरी एक thumb rule है कि your age divided by 2. Your age divided by 2 should be the percentage of your assets in gold.
अच्छा ऐसा?
तो ना मैंने आपको अपनी एज बताई, ना मैंने
ना allocation बताया.
Allocation बताया. But you can get some rough figures out of that.
So basically, the older you get, the allocation changes accordingly. Becomes higher basically. So so you don't want something too volatile if you're too old, basically.
Yes. Unless I mean you want volatility in your own age, which some people may want, but normal people may not want it.
अभी एक और देखो, एक problem है कि SEBI has now decided, the exchanges will now change the timings of equity, ruining our personal lives and losing some hair in the process. So emotionally, how do you feel about it in one line? इसके बाद, how does this change a system trader's approach to his already backtested strategy? Because now let's say gaps कम हो जाएंगे, the volume will be spread throughout the day, etc. Price discovery शायद has more time to do, jumps कम होंगे. But what do you feel about this?
So I think for strategies like ours, which is looking into the market on a weekly or a monthly basis, nothing changes. So from that perspective, because we are not looking at intraday market at all. But for trading strategies, for instance, a trading strategy which is trading, let's say, an hourly basis, there also nothing changes, because you were looking at 35 hours in a week. Now you will be looking at 42 hours in a week. So only the number of hours have changed. But for strategies which were intraday mostly, there what may happen is that during the afternoon period, it may become extremely dull and maybe even choppy. And most of the action, of course, will remain in the first 1.5 hours and the last 1.5 hours. That nature probably will not change. So strategies that are more focused towards intraday strategies, I think those may be the ones maybe that may require a relook at whether the backtest remains applicable exactly like that or not. But it's going to ruin.
I think one obvious thing is, right, ki a lot of intraday strategies are based on opening times. There'll be some calculation on opening times, and then there'll be 315, 320 cutoff may I will auto square off if target is not hit or something. So now that 315 auto square off doesn't exist, now it's 11 something. So that is one problem, because now you'll have to hold longer, and the exposure may cause an issue, because before the market closes, America is also opening, and all that information which used to get factored in the morning now gets factored in real time. So something will change over there.
My own sense, and I've not been following this very closely, but my own sense is this will not happen, at least for the cash market. So this will happen first for index futures, and then maybe for index options, and then maybe for stock futures and stock options. So I don't think the exchange will also hurry into this, opening up all the segments for longer periods. I think they will test it out with index futures in a stepwise fashion, and then they may, further go there.
Let's go to your social media. आपका social media बहुत ज़्यादा active है, so I can see a younger photo of you being used over here.
I think that photo belongs to the period when I started on Twitter, and that is a long time back also now.
No. I have another one over here. Okay. So we have done some homework, gone through your social media posts. So over here you retweeted this, where the S&P is up 8.9% in the first 22 days of 2023. It's the best start of the year since 1987. You retweeted this. And what are your views around market 2023? ये आप speculate करते हो क्या कि 2023 में क्या होगा?
कोई point नहीं है speculate करने का, लेकिन मतलब लोग time pass करने के लिए कुछ करना होता है. तो I mean, it has no relevance actually. I mean, 99 people out of 100 will not get it right anyways, and the one person who will get it right will not get it right the next time. So no point of this. But yeah, I mean, my sense is that we remain the strongest, or one of the strongest markets out there versus others, and that is very reflective with where Nifty stands versus other indices, global indices. We are down 5% from the top, others are down 50% from the top. So that tells me that we are there, ready to go, but we are waiting for slightly better environment, maybe more lesser headwinds, more tailwinds. So we are just at that line where we want to go, but there is some resistance.
But that's a good thing. That shows strength in our markets at least.
Actually, what happens is, because of the recency bias, we become very depressed looking at last 3 months, 6 months, 1 year of the market. I mean, if you just go 5 years back also, 2018 mid caps was the high it made. By 2020, it was half of that, and from there we probably tripled. So when we look at 5-year period, we see that we are actually not in such a bad situation right now. But because we've seen some drawdowns in the recent 1.5 years, so forth, so we become, oh, my market is bakwas, what are we doing? But I mean, market returns are always lumpy. So you will get returns of 2-3 years lumped in 1 year, in some 1 year, and then 2 years it will do nothing. So that will always happen.
like this body has this circadian rhythm, right? कि अभी सुबह हुई है, अभी रात हुई है, अभी सोना है, अभी lunch करना है. Like the body knows this. I think there is this trained circadian rhythm that we have, which is this rhythm that starts from school, right? The world is divided into different periods and different maths and English classes. And then we get into college. Life is divided into friends, family, and then college. Then there's internship. Life is divided into half day internship, half day maza karo. Then life comes into the best part, working in a corporate, barring learn up, of course, but generally it sucks. So your day is divided mostly into work, and you have to have food at a certain time, you have to do attendance, you have to do all these things. And then when you're paid in weeks or weeks or months. So the brain doesn't think in terms of lumps anymore. It thinks in terms of a timetable कि यार मैं इतना काम करूंगा मुझे इतना पैसा मिलेगा या मैं
structured, yeah.
Everything is super structured. But that's not how wealth is created, right? No one can make wealth, crazy wealth at least, unless you're a Sundar Pichai. But even there was experience compounding taking place over like months of salaries. It's made lumpy over long periods of time. And you're either compounding money, assets, or skill. One of these three things. So the mind doesn't understand that, which is why you said recency bias hota hai. So that is very interesting. I hope people get to understand this कि यार पैसा बनाना है चाहे वो skill के through हो या asset के through हो. It'll always be lumpy, right, Alok?
Absolutely. And you very rightly said, I mean, the brain, our human brain does not think linearly. कितना भी उसे train करो, वो linearly ही सोचता है कि it doesn't think exponentially. It only expects linearity. So linearity, तो market doesn't work in linearity at all. So I mean, from that perspective, the earlier we are able to accept the fact that it will not be linear. And also I want to come back to that point of drawdown that you mentioned, because a lot of people are not so or probably are confused about this drawdown issue. So drawdown is I think one of the most important aspects of investing or trading. So why? Because let's say you are running on the road और आप गड्ढे में गिर रहे हैं. अब वो गड्ढा अगर 3-4 फुट गहरा है तो आप उठोगे and you'll start running again. You'll get out and you'll start running again. But if that gadda is 15-20 feet deep, it will be very difficult to come out of it. So that's the same happens in portfolios and stocks. If your drawdown is deep, it will be very difficult to come out of it, and it will take a lot of time. If your drawdown is shallow, you will get up and you will race again very, very quickly. So you have to design your system in such a way that your drawdowns are minimal, not too deep. So the idea should be that get rid of your losers early and keep on sticking with your winners. And that's exactly what happens in momentum investing. That you have to get out of your losers very, very quickly.
आपके फंडे बहुत अच्छे हैं, बड़ा पसंद है. तो आई एम गोइंग थ्रू योर एंटायर टाइमलाइन ओवर हियर, लोग. आई कैन सी कि आप मैक्रो बेस्ड इतना सारा आपका, अगेन ग्रेट फंडास, दिस व्हाई आई फॉलो यू आल्सो. बट एक्चुअली में यू आर नॉट रियली डूइंग दिस एनालिसिस टू एक्ट on your actual investments, because वहाँ तो factor based है, you're following a strategy, and यहाँ पे all these interesting variables are changing the world around us. How do you manage these two mindsets? Because I know you don't break your own rule.
So देखो mind में I mean there's only so much space, right? So आपने strategy बना दिया momentum का, now that is running on autopilot, that's an algorithm. तो उसमें तो mind कुछ लगना नहीं है अभी, तो mind आपका खाली है. So essentially you're trying to gain knowledge about what's happening in the world. It may not apply to what you're doing in terms of stock trading. But in terms of asset allocation it helps. So your asset allocation to gold, your asset allocation to non-equity, from there you get a lot of perspectives as to how you should manage that, because that is not on autopilot.
Interesting. Oh, that is, I did not expect that answer. Very nice. Thank you so much, Alok. I just wanted to reinstate why we did this, right? I think the world that is changing now, I think more and more we need practitioners to be teaching adults who have maybe 2 years experience working somewhere to understand how money works, finance works. Because if we don't teach each other, then I mean, I don't think get a degree, get a job full stop is what is the world we live in today. Like, practitioners teaching things, sharing with us something that we can use immediately is, I think, what the new world is. I think future universities will also look like that. I think that get a degree full stop wala cheez story is slowly fading away. Or maybe that's the start of your learning and, there's a different institute that takes over from there. But thank you so much. I learned a lot and love your stories, Alok. I hope I see you again next time.
Thank you, Prateek. Thank you for having me on your show. And I really like the work that you're doing, and LearnApp is doing so well. And I also have a small course on it. You graciously allowed me to have a course on it, and I would want all your viewers to go see that course. And also, so many market experts are there on LearnApp. So please use LearnApp as a learning tool. It's a great knowledge base that has been built there. So I think this is something that you need to discover.
I think one thing I didn't tell you, Alok, last time is what we've done is we've converted LearnApp into a batch system. So what happens is leaders like you have videos on the platform. Our students come in a batch. So there's a 1-month batch, 15-day batch. So if they're learning, say, factor investing, they will learn you plus other people teaching them different ways to manage portfolios. And they have to attend live classes where they create these portfolios themselves and post it as proof of work.
Okay.
And once they've created 4 or 5 proof of works, peer reviewed, and this complex way to actually grade it, they actually graduate. So that has really changed because now, unless you have the ability to do, you don't graduate. It's not only watching.
Wonderful. So it's a university now.
Exactly, that's what it is.
Exactly.
So
Great.
Thank you so much for that, and
thank you.
we'll tag you.
Thank you.
Bye.
Sure.
Bye.
Thank you. Bye. Thanks to our entire team also.